Hello, welcome back again. So in this part, we'll be solving the problem number 3 and problem number 4. So let's see the problem. What do we have? So the following are the partial income statement account balances taken from the December 31st, 2024 year end trial balance. Okay. And there's a restructuring cost, interest revenue, before tax loss on discontinued operations and loss on sale of investment. Income tax expense has not yet been recorded. So the income tax rate is 25%. So prepare the lower part of the income statement beginning 885,000 income from continuing operations before taxes, and we need to include the earnings per share disclosures. The company had 100,000 shares of common stock outstanding. Okay, so to do that, let's start with the income from this one. Income from continuing operations before taxes. So this is our 885,000. And total income tax expense should be the 25% of this one. Okay, this is actually the 25% of this one. Okay, and income from continuing operations would be equal to, so the income and less tax, right? So this should be equal to this minus this. Okay, and loss on discontinued operations. Okay, how to do that? So what do we have? We have, see that Uh, before tax loss was 570, right? So, so before tax loss 570 and tax is equal to 570 multiplied by 0.25. So this one, and the net is equal to this minus this. So 427,500. Okay, can you see that? Okay, and the net income should be equal to sum of these two. So why sum? Because see, they have different signs, meaning one is positive and the other one is negative. So sum of these two would be equal to positive because the positive number is higher, right? And earnings per share (EPS) should be the income from continuing operations, which is equal to, see, D9 means income from continuing operations, this one divided by 100,000, and the loss should be equal to this one divided by 100,000, and the net income should be this one divided by 100,000. Okay. Okay. Now let's go to the problem number 4. So in the problem number 4, so what do we have? We have sale of its robotic in business for 11.8 million. So the book value of the asset was 8.4 million. So there is a gain. And the income from operations of the segment was 5.4 million. Okay. And the pre-tax income from other continuing operations for the year total 13.4 million. So we'll start with this one. And then the income tax rate is 25%. So we need to prepare the lower part of the income statement. Okay, and now let's go. What do we have? So see that we have started with the income from continuing operations before income taxes. So this is our 13.4 million, actually 13,400,000. So income tax expense should be equal to, say, this 13.4 million. Okay, sorry. So this should be equal to 13.4 million multiplied by 25%. Okay, and income from the continuing operation should be equal to this one minus this one. So 10,050,000, and discontinued operations. So income from operations of discontinued component 8,800,000. So how do we get this? Okay, so let's see how we get this one. Okay, so this one we have got, so let's see, income from operations. So it is given, say, income from operation was 5.4 million for that. Okay, and meaning from the discontinued. Okay, and then it's meaning 5.4 million, meaning so 5,400,000, right? And then gain on sale of assets. How? So we have sold 11 for 11.8 million, and the book value was 8.4 million, right? So 11.8 million minus 8.48 million 400,123,000. So see that. So this is our gain. So and the total is going to be sum of these two. Okay, 8,800,000. That's so this is the income from operations of discontinuing components. Actually, this the correct term is discontinued component. Okay, and then income tax expense, which is actually 25% of this one. We can see that. See, this is the 25% of this one. And if we subtract this 2,200,000 from 8,800,000, this is our income on the discontinued operations. Okay, and finally the net income should be equal to sum of these two, right? So we can use the sum function. See, if we use the sum function, we can find these two. Okay, I think you got it.